Good morning, all. Today is the 14th of January, and where are we in the market? So I'll just go over a couple of charts here that are interest me. As far as the S&P index indices, I have the monthly chart here, and it looks like it's going to test all those little pivots and my key areas that I'm looking at is right here at about 1700, so that's 1693 right there, and then 50% retracement. So back in 2009, this thing made a low of 664, climbed up all the way that to 2134. So that's insane. I'm expecting a little pullback, and I guess old resistance will be support. So, but that's way too obvious, I think. So let me see. Let me draw a line here. So people are gonna try to buy here and potentially get trapped. I think the levels are, you know, will be ultimately. Let me put a rectangle around this area right here. So that would be more of my buy zone. Let me remove this one. So maybe in the lower end right here, it's about 1300. But I think where it's going now is I think this thing is it is due for a short, and it might bounce a little bit, but you gotta watch this. Let me see. Let me zoom in here. I'll watch this price right here when it retraces. So that's around the 2000 area, right below 2000. And so hopefully, I mean, this is a monthly chart, so you got to wait till the month ends. But I think it's selling's pretty strong. I'm expecting the same behavior pattern as this one is, because see it dropped, came back, retest this level, these price area right here, and then sold back off. So I think it's gonna go lower. That's the reason why I think short is a better play for the indices, at least for the S&P, and the Dow is not looking any different. So I'll just go over for the S&P right now. But today's trade, I think I decided to just kind of stop because there's not much really commitment in either both up or the downside. It's been very, very, very wicky, and the move is just very erratic. As you could see, you have a green, red, green, green, red, red. I mean, yeah, it's stuck in this range right now. So getting in there and putting on your risk is probably not worth it, or at least I've played it way too many times that I got burnt. So I decided not to play it. I'm waiting for a better setup, much cleaner setup. And today I was just lucky that came out positive on both accounts. This one right here, like I said, I always try to do I call a feeler trade. So I'm trying to get a feel of what where the market is heading. So the only way for me, for some reason, to focus is I put on a trade. And the technique to that is to keep your stop very small, so you could see this one 4 ticks, 5 ticks, just to get a feel of where it's going. But today, like I said, each of these range are you got about an average of 8 ticks, 9 ticks if you average all the range. So I couldn't get, there's no commitment to the upside or the downside. So I was able to get lucky on this one on my last long entry. I longed this at 36.16 at this area, and then hoping for a clean breakout. Didn't quite do that. Lack of commitment. Placed my stop, got stopped out, and I quickly reversed at 31.10, and I got in all the way, and then I noticed there's a support level at about 83 or so, and sure enough, this thing kind of stopped out, stalled right here, and I wasn't gonna wait because I had two losers, so I was trying to erase my losers. So I got out at 89, just market, So and then now, like I said, the it seems like it's stuck on a bigger range, and it's difficult to play these because you know the 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 size as far as each of these range, it'll break out. So like for instance, this candle right here with a low of 81, it'll break out 2 pennies, 3 pennies, and then it'll shoot back up. Or maybe that's not a good example. Like this one right here, it'll break up and then it'll shoot back down. So if you've been trading for a while, especially when it's getting close to like 2 weeks closing to expiration, which is I think next Thursday is the expiration for the February contract. So it normally gets so wicky that way. My bias was to the long side, but just because of this thing, if you look at this is a daily, the bias has been to the long side just because it's been down so many times. So I started focusing on my levels. So today I had, yeah, these dots are essentially just retracements. So I was watching this area, and sure enough, it got rejected right there. Now it's kind of falling to the downside, but I don't think, um, I don't think there's, your bias should be to the long side today, just because of that fact that daily is stronger than any of the other time frames. But to get there, it seems like you're gonna have to ride, either have a huge stop, but or you either have a huge stop, or you just have to learn how to price the market, which in this situation it's very difficult to do, just because right now, current range as we speak, it's about 95 cents, and it's already 9 o'clock. So normally it's like $1 or so. So right now it's a little bit compressed, and that's what caused me to decide to kind of take it easy today. I didn't want to overtrade, so three contracts, that's good enough for me. Um, anyhow, let's see. I think that'd be it for today. Um, I think all my, as far as indicators are concerned, I did play a very good play yesterday on the report. Um, I took in, let's see, I was on the long side yesterday. So yesterday the report, so I'll pull this one down. So report yesterday was around, yeah, this area right here. So I marked this level because I have a buy zone right around this level, and I participated in this. So I didn't get as much as I wanted to, just because at this point it's already 9:30. I was getting ready to go to work, and I think my best entry for that was, let's see, what was my lowest entry yesterday? Um, I think it was the 36. I think it was the level I was participating in. So it was under this candle, and I participated on 36, and I was able to catch some of these moves before it slid back down again. But yeah, this buy zone level, this is this is a indicator that I just program myself, just because it helps me look for levels, and at the same time, it's changing colors to magenta. It just helps me visualize. There's nothing really magical about it. It just helps me identify and try to find my levels really quickly to reduce my prep time in the morning. So yesterday's play, I was just really waiting for that move, and I did better on Wednesday. I've been journaling a whole lot, and it seems like Wednesday is my better days, believe it or not. So I played this, and sure enough, had I held this overnight, which is kind of crazy for crude, I think it would have been much profitable now. It's like almost a, what is that, like a whole dollar move already. So, anyways, that's it for me for today. Hope you guys are careful out there trading this sideways market. You know, um, so going in today, as far as my morning prep, um, I knew it was going to be a sideways market just because of yesterday's price movement. So these are the levels that I'm waiting on. This was my actual target: 31.43, 31.52. That was my target. So when I got in here, um, I was trying to target this level, but look at the moves today. It's just very consolidated. It's very tight. I was expecting that it'll behave similar to what happened on the previous day. As you could see, overnight session, it's kind of a sideways market. Suddenly jumps up, breaks this high, and a slight pullback, and then off to the races, right? So, and then if you look at the one before that, let's see here. So same thing as this one, broke out to the highs, pulled back, and suddenly it ran one more leg. That's a dollar move right there. So I was like, okay, well, this thing is moving. Seems to have another, it creates another set of retracement before it goes, completely reverses. So why not play the same thing? So I played the same manner yesterday, and I made money yesterday pretty well. And I made more money shorting this side because just with the combination of reading the tape and what's in a huge stack order. So yesterday, what what caused me to start shorting this is that yesterday at at about 31:30 there was 1,000 contracts flashing the order. So I thought that was a fake order, right? And sure enough, got filled 31:30, and then it broke down a little bit, and then but I didn't trust it. I didn't know if that was a cover for short or a long. So I was watching it. I was watching it, and then sure enough, at this candle right here, triggered a lower low. So I got in. I believe it was 31.26 is where I got in around the 31.30 area, because I figured big money is risking at that level. So that's what I meant by reading the tape. And sure enough, I caught this big move. I was just doing one contracts at a time. I caught this big move, rode it all the way over here, and then I started to go. Like I said, my other account, I started going long, and that's how I was able to take advantage of that move. Uh, my statistics, on Wednesdays, I seem to be doing pretty good. So I went ahead and played that. I'm a little bit cautious today because normally on Thursdays I'm at 27%. As far as success rate, it's only 27%. So I was a little bit cautious. I'm happy today that I'm might able to increase that 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 statistics of mine, because I've been using statistical analysis on my own account on how I trade on any given day, and it seems like it's holding true so far. So as you can see, you know um, two little losers, one winner. So that's like 66% loser and then 30% loser. I mean winner throughout the day. But what's going to make a difference is your risk reward ratio. As you can see, I'm only risking about 5 ticks at a time. So my target is always bigger, which is that's 4 times the amount, right? So as a result, you trade two, you lose two, that's fine, and then you take the big winner, which eats up all these losers. So there's where I think the essence of winning is just keeping the risk reward ratio, at least 1.7 is good, but on a long term projection, analysis wise, you really want to keep it at 2 or above, maybe 3. Even if you can keep a 3 to 1 risk reward ratio, that's probably at best. But there's no guarantee what you can extract on the market, and a lot of times what happens is the reason why you can't get the 3 to 1 risk ratio is that you put on a trade, and your stop is also in place. So like for instance, for me, I have this OCO, order cancels another. So as you can see, at 89 is where my stop would be if I was to place this trade. So once that trade is filled, now you became your anxiety just increases, and I'm pretty sure you knew or a veteran trader could probably relate to this, but as a newbie, my psychology is not really at best, and that's what I'm working on. So but as a newbie, your anxiety begins as soon as that order is filled, and then now you're hoping that your stop does not get taken out, right? So it goes up 10 cents above you, and suddenly you're wanting to move your stop or whatever, and sometimes you just have there's where money management comes in really well, to not move that stop until it goes to a certain level. The charts would suddenly, this is where the chart comes in handy, and you're able to price in the market and when you should move the stop. So for instance, if you were to enter at this candle, a break of this candle, right? So you see this wick, it came all the way back down. So that's 95. 90 would be my stop. So suddenly this thing sells off, and suddenly I'd get out, right? But you know this is where money management comes in, is because, okay, when shall you move your stop, and when should you take profit? So normally today I had it set to 10, so that's 2-to-1 risk ratio. But like I said, I just the speed of the tape, the way it's moving today, where I entered, and just coming in at 8:30, I knew that I can get some momentum out of the 8:30, um, the 8:30 time frame, because it seems like it's not moving on the pit session anymore, which is 8 o'clock. It's moving at 8:30 when the market opens on the whole stock market. So I took advantage of that fact, and that's how I was able to get some wins. Anyways, okay, so I hope that helps. If you guys have any question, just send me an email. I'm more than happy to answer your questions. And really, this is just a matter of try to be patient. So try to be patient on your entries, and try to improve your entries and exits. That's what it's all about. And when you put on a risk, when you put on a trade, what I'm learning so far really is just not to over manage it. I mean, so basically what I'm trying to say is that if you put in a risk right here at 93, you understood that you're willing to risk 5 ticks. So if you take that loser, then just take it, accept it, move on, right? But that's the constant psychological battle that I have to pretty much overcome, and the only way that's you can fix that is experience. If you're here all day long, try to learn this market. The only way that you're going to fix that problem is through experience. So I know there's a lot of magic indicators out there. YouTube would even sell you all kinds of crap, and I find out that most of these guys doesn't even trade. They record the session, and they replay it and try to trade it. That's why they always win. So with me, I mean, I have nothing to tell. I have really nothing to sell you. I'm just relating to you my experience in the market, and hopefully, you can learn from that. And anyways, so in any event, I don't want to rant over all that crap. I'm certainly not here to talk bad of others, but if you need any help, just give me a holler, let me know, and until then, I'll see you on the next video. Take care.